Welcome to the channel. I'm James, and today we're looking at TakeTwo Interactive Software Inc., otherwise known as T2. They have just released their fourth quarter earnings, and this is their full earnings for the year, and we're going to be going through these numbers right now. Then we're going to be putting these numbers in our discounted free cash flow model and Buffer Graham intrinsic value model to see if the stock is a buy in 2022. First, can you please give a like on the video? Helps me out as always, beats the algorithm and all that fun stuff, and hopefully I can help you beat the market. So, has TakeTwo beat the market? Well, they are currently valued at $113 a share, up 3%, as I said, in the aftermarket. But if we go year to date, down 38%. Now, if we compare that to SPY, SPY has been hammered down, down 16% on the year today, but this is down 38%, and also down the year as well. Market has been slightly underperformed, slightly flat, 3.7% down compared to TakeTwo, which is down 34%. And if we go to 5 years as well, just been beat out by the market only because of this latest dip, but 67% up for the market in the last 5 years, whereas 62.9 for TakeTwo. So will they beat the market? Will the stock be going up? That is the question I'm going to answer today. So we have the 3 months ended here, 21 and 22. Then we have the 12 months ended on the right. So what has happened with the net revenue? Net revenue has gone from 839 million to 930. So revenue for the quarter has increased. On the year also increased 3.3 billion to 3.5. Now if we just go here, you can see the revenue has gone from 2.6, 3.1, 3.3, and is now at 3.5, which is its all-time high. So revenue is up again. So that is excellent to see. Next, we're going to be looking at the profit. How do we get the profit? Net revenue minus all the costs of goods which are sold, and net income for the quarter is down 218 million to 110, and unfortunately for the year as well, 588 to 418 million. Now, if we go back to Yahoo Finance, what has happened with the net income here? 2021 was a up year by quite a bit, but they've not been able to squeeze out as much profit from there. 333 million, 404, and 588. And as I said before, it is now at 418. So almost not quite 2020 levels, but it has decreased massively from 21. Let's have a look and see where there's been any major increases in the cost. So royalties. This is on the cost of goods sold. You can see, yes, actually, royalties was down. Software and development cost royalties was up. Licenses was down as well. Total cost of goods sold relatively flat. Gross profit up a little bit. Sales and marketing did increase. General admin increased massively, 390 to 510. R&D up a little bit, 317 to 406. But I say the main one is basically it's this. Sales and marketing is up quite a bit in general admin. Overall, about 300 million increases, which is obviously cut into their profits. Earnings per share down $5.41 a share, down to $3.62. Now, speaking of shares, we're looking at the shares outstanding. Are TakeTwo buying or buying or issuing new shares? They're actually issuing new shares, but not too many. 114.6 million. And that is now 115.4. So what does that mean for investors? Well, as I always say, if you have one share of a company and there are 10 shares, you own 10%. If the company bought back 5 of those shares, then there would only be 5 shares, you would own 20%. Or if the company then issued 10 more shares, they doubled the amount of shares, then you would own 5%. So you would own less of that company. Now, if this has been done in the quarter, so you can see that very small increase of 200,000 shares, but over the year it's been 1 million. Now, if we look, that has actually probably been a good thing, because if we go by the past 5 years, if they did that anywhere in 2021, 2022, the stock price is a lot less than then. So it's actually worked out quite well for them, because they can use this capital to invest in the company, but you don't want to be diluting shareholders too much. Now we want to be going to the cash flow statements, and if we just scroll a little bit down here, you can see here, yes, cash flow statements, it's net cash provided by operating activities minus capital expenditures. Net cash flow provided by operating activities is down massively, 912 million to 257. So this is really going to affect the free cash flow statements, and capex in TakeTwo's cash flow statements here is on the purchase of fixed assets, which is up massively as well. 68 million up to 158 million. So that is obviously a massive increase, and that gives a free cash flow of, well, what does that give you? Not too great. Sorry, I just thought someone knocked on my door, but I don't think that was the case. That gives a free cash flow of around about 100,000. Sorry. Yes, yeah, that's right. Sorry, 100 million. I'm looking at my sheet here, so let me go back to Yahoo Finance. 100,000. The numbers are in thousands. Sorry, I just read that number there. 776,632,843, and now we're at 99. So that's 99.3 million of free cash flow. Well, let's get into the cash flow statement right now. Calculate the future free cash flows based on these averages. This 2020 was a bit of a dip. Let's just go see what this Valky's evaluation right now actually says. The stock is a buy, $197 a share, 79% discount, and this is with averages based on 2022. Now, if we were to sort of say this was a bit of a blip year, now obviously there could be a lot of reasons that it is, that would give us an average of 177%. And then once again, averages here would be a lot less, 11%. And the net income margins will be slightly higher once again. That will give you about 14.35%. That would have it at $270 stock, which is a 145% discount. Now 2022 has been a down year in terms of free cash flow. This looks more realistic, so according to that, the stock would be a buy, and actually quite an easy buy. But if we look at the buffer game intrinsic value, that also has the stock at a buy, $128 a share. So let's just go back and have the original number there. Let me undo that again, and one more time, and one more time. Let's add them both in. So discounted free cash flow says the stock's a buy, and the buffer game intrinsic value stock's a buy. Somewhere in the middle of that, that's what, $150, $160 a share, which is a nice little increase. And if we go back, that was, the stock has previously been at about 210, so it would have to have a bit of a strong rebound. The stock hasn't really dropped below this point. I mean, it's been 2019 and it's been on pretty steady increase, and this has probably actually broke that as well. So stock does look like a buy based on the models. And if we go to tip ranks, what does that say on the stock? Well, it actually has it as 10 buying and 1 holding, strong buy overall, upside $199 a share, 80% upside. On the low side, 173. So in 12 months, trip ranks are expected to be 173 at the low side, which is still a very, very tidy gain, actually higher than both the models. And 231 on the high side. So analysts are saying the stock is a buy. The model itself is saying a buy, and really this is a good stock overall based on those models. Now, one thing, these are some of the individual titles that are massive. The two biggest I would say here are Grand Theft Auto and NBA 2K, and Grand Theft Auto has, well, not recently because Grand Theft Auto has been out for a while, but has switched to the sort of online subscription model, GTA Online being the main driver of the revenue there. When I started playing Grand Theft Auto, it was, you know, you buy the games, they would sell millions and millions and millions of copies, but there wasn't really a way to sort of do a subscription-based model, which they are now, because people will buy the Shark Points, I believe, and people put a lot of money in these games. NBA 2K is the same as well. Microtransactions are rampant in those two games. Not so much about the others because I don't play them. I did play Red Dead Redemption, but the online, I did not go on too much, but these two games are actually two games I really enjoy. And even I myself have put a little bit of money in them. So try and get some of my money back and buy some shares. Anyway, right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.